Good morning. This is Tuesday, December 20th, 2022, and it's 10 o'clock a.m. Pacific Standard Time. So in the markets, last night, markets went down quite a bit. Actually, the Dow was down 250 points, I think, and some news report came out about Japan raising interest rates. So it's happening all over the world. And anyway, it's just news. Market went down, then it came right back up, and now it's right here. So we're, plus 8 points. Not a big deal. The feeling I have is, even though it's getting later in the year, later in the month, this market still has more to travel down. I don't think it's just going to sit here. It might, but my feeling is it's going to continue down till Friday. And I think we're closed on Monday, and then the rest of the week it can still keep going down. It can still move. Markets can still move in December, even though it's Christmas, and even though the volume, it might be low, but doesn't mean that the markets can't move with low volume, because they've done that in the past. So anyway, that's it as far as that goes. I kept my position. I didn't sell because I was thinking I might sell before this thing started retracing, but as it is now, I'm hanging on to my position. I have January put options here. Quite a bit, actually. I'm up quite a bit too in profit. It'd be nice if I was going to sell actually this morning, wait for it to retrace, and then buy back February. But those are decisions that sometimes I make and sometimes I don't. But that's okay. I'm sticking to where I'm at now. It's just part of the game. This is how you play it. You have to go by feeling. This is all feeling. Like I said before, I have no indicators here. I don't go by the news. I don't listen to what they say in the news. Sometimes I'll watch it just for amusement. But this is all feeling that I have here. And I've been pretty accurate. If you've been following me, been very accurate. So even if I am accurate as far as where the market's going, doesn't mean that I would make money. I am making money, but even if you're right, you can still lose money, because it's a matter of time how long it takes to get from here to here. So for me, when I bought my positions here and again in here, if this market were to, I know it's going to go down, but if it were to turn around and go back up and take a long time and come down, my options would expire. Even though I was right, I have to be right. Since I'm only in the markets for a couple weeks, I have to make sure that these markets move within that time frame. And so that's kind of something I've been perfecting. I've been doing this for 24 years now. So so I think enough said about that. Just waiting for the market, hanging on to my position, waiting for the market to come back down here, which I think it will before the end of this year. And that's it for the ES. So if we're looking at the Russell, it looks like the Russell doesn't have too far to go to come down. And also NASDAQ doesn't have too much further to come down to the bottom. And so who knows, it might even come below this. And that means the ES or S&P might not make it to the bottom. And then the Dow might not make it to the bottom either, unless it completely crashes, which I have a feeling at this point it's not going to do that. Even if it came halfway down, that'd be pretty cool. And then with the ES, which I'm trading right now, if it came down to about this point, that'd be pretty cool. And then I would probably get out, hoping to get out by Friday. Clear my position, and then by next year I'll be buying some February options. Yeah. So I wanted to point something out here. There's this VIX. It's an indicator sometimes some traders use. You can't really depend on it as far as during, at least I don't really look at this. The only time is like during market extremes like we're having right now. So right now it's at 21. If you look at the past, it's said that when this comes all the way up to around anywhere from I don't know, 60 to, let's say 80, 85, 90, then you're looking at a market extreme, and that means that we've reached a bottom, because this trade's opposite. It shows an opposite chart of where the market's going. The market, when it goes up, this goes down, and when the market goes down, this goes up. So this is kind of an extreme, and that was definitely a bottom. That was during the pandemic when the market went way down. Right here, Dow Jones 20, see the market went way down here and then came up. So it went down to this bottom, and then with the VIX went all the way to the top. So that I was telling you there was a bottom in place. So right now these markets aren't even close. Not even close to that. So we got a long ways to go before we hit bottom. So that's telling me that this Dow right here is probably going to wind up somewhere below this line maybe by the time it's done. So we're here, and let's say it went to here, and we're here. Got a long ways to go to its bottom. So what's the pros and cons? Pros for people that are shorting, that know how to trade this market, meaning that when a market goes down you short it, when a market goes up then you go long. So I'm shorting this market. That means I've got plenty of shorts here, plenty of money to be made. There's going to be the market takes a while from here to here. It didn't take too long, only because this is definitely not normal for this to happen. But you see the market took a long time to get to this point, and then to come down, how long did it take to get from here to here, and then from here all the way back down? That was 2017 all the way to 2020, and then just within a couple weeks it went all the way down and washed all that out. So you can tell when it goes down faster and harder. But here's the pro about this is the con about this is because all these people, just these long-term people, they buy and hold, they just lost all their money here. Of course they got it back, but this is going to happen again, and then those long-term people are just going to keep holding until they're down to $0. But here's the pro about this: if you know how to play these markets and you trade going down, you can make a lot of money here. And that's what's going to happen here, except this is much higher than that. That means it's got much further to go, and you got more opportunities going down. So there's going to be a lot of billionaires being made right in this move for the next quarter, and millionaires right here to here, just in a short amount of time, maybe 3 to 6 months. That's not very long, and that's probably what it's going to take to drive this market down, because it goes down pretty fast and pretty hard. So I don't like to make recommendations, but I urge you long-term traders or buy and hold to get out of the market and play the market the way it's supposed to be played. And that's when it's going down, you trade it down. When it's going up, you trade it up. And if this is wrong and it turns around and goes up, well, you can always get back in the market. That's not a problem. But there's no way this is going to go up. Interest rates are going up. The Fed's raising them. They're going to keep doing it until this market's at the bottom. So we're going to be looking at high interest rate, high inflation, high unemployment. That's what happens during these corrections. Okay, so this morning I got a bunch of alerts. I always set alerts on here, kind of like this. Create alert, and when it hits below, there. Well, there's my alert, and I set these every night on certain stocks. This is Apple. This definitely broke my alert going down, meaning that these stocks, big stocks like Apple and Tesla, continue to go down. They continue to break the lows, and they continue to go down. Another one is Tesla. Where's Tesla? Right there. Same thing. Look at it. It's going down as we're talking here. Breaking new lows. So what's the significance of this is, there's stocks like, I don't know, how about Netflix? Yeah, Netflix is up higher. It's gone up, starting to come down now. They're all going to come down. But Netflix has been going up when Tesla's been going down. So Netflix is nowhere close to the value of what Tesla is, but yet it was going up. So why is that? People do a lot of analysis, and they buy companies according to how strong the company is, how much profit they're making. And that has nothing to do with trading. When you're investing and trading in the markets, the reason why stocks go up and down is because of demand. It doesn't matter if the company's making money or not. It's well proven. There's companies in 2008 and 2000 that were making any money. They're losing millions of dollars a month, and yet their stock was going up, and vice versa. So this is part of trading. This is what it is. This is a money-making game. People don't care about the companies. They care about, these traders only care about what the price is. That's all they care about is price. So I would not waste my time as doing any company analysis to find out if the company is going to be here in 10 years. Because you want to know that if you're going to be trading and holding your market for 10 years. But why would you do that? That makes no sense. I've already proven that buy and hold does not work. Unless you're Warren Buffett. But he can afford to wait 10 years. He can lose, and he does, hundreds of millions of dollars, and then the market turns around and goes back up because he said he's not a trader. He doesn't want to get in there and trade like I do. So he can afford to just sit there and wait and lose hundreds of millions, and then it comes back up. But that's only a handful of people on this planet that can do that. So the same thing with Amazon. Amazon's, of course, a very strong company. And it looks like it's going to be here for a while, although Jeff Bezos said it's not his baby anymore. He's looking at his other projects, and he's not putting too much attention towards Amazon. And he's thinking that Amazon will probably not be here, in the future. So I'm not sure what that means, but I'm guessing, and he's pulling billions of dollars out, so I'm guessing he's not really concerned about Amazon. And besides, Amazon, 70% of it is made up of independent sellers. It's not all of Amazon. So, the market continues to make new lows. Right now it's up a little bit, but it's going to keep going down into the single digits. and maybe not that far. It might go into the teens, but I would say at least the teens. So just to give you an example, I always hear this all the time. People say, there's some stocks that are up to $2, $3, $4, $500 a share, and they're going to be going down to, whatever, $20 or lower. And people say that's impossible. Well, I saw that in 2000. A lot of stocks just went from $400 down to $2. And, here's one, I don't know if this is a pharmaceutical company, but, it was at $141. And in one day, it dropped all the way down to $7. Now it's at $1.24. That's what's going to happen to a lot of these stocks. So it's not impossible. Now, for it to drop like that on one day, that's pretty unusual. There must have been something, maybe, I don't know, something happened to the company. Maybe they're getting sued or something. But just to give you an idea, there's lots of these other stocks I looked at that used to be, that's this year, $140, $240, and now they're down into single digits. So that's an indication that's where the rest of the market's going. But people don't do that kind of analysis, so they lose their money. You got to do your research. Or you can watch my channel. I'll do the research for you. Or I can just give you information based on my 24 years experience. Okay, so we're back to the ES. Looks like the market's going up a little bit. It's up 12 points. And like I said, I'm going to wait till the end of the week. Like I said earlier, that when these markets start heading down, and they're doing it now, you can make some really big money. Just when I bought here and then I bought again here, I'm up already a substantial amount. And anybody can actually trade this way, and by the time this market hits here, you can make enough from here to here. And what is that? Maybe 2 weeks time? You can make enough in that time, probably more than what the average person in the US makes in a year. So that's how powerful these markets are, especially going down. So this is a good time to take advantage of this opportunity, because you're not going to see this again for another 10 or 15 years until we have another recession. This is going to go down, and let's say it hits bottom in the next 2 quarters, and then from that point on, it's going to start trickling up, and then it might take another 10, 15 years. We might have small corrections in between, or I should say sizable corrections, but nothing like what we're having now, not even close. In fact, from what I understand, we're not going to see this again, this kind of a correction, in our lifetime. Even it's supposed to make 1929 seem like a walk in the park. So that's what they're saying. That's what these big billionaire traders are talking about. So they've been around a lot longer than I have, about 24 years for me. They've been trading, some of them 40, 50 years, and they've seen it all. Okay, so that's it. I'll check in with you guys tomorrow, see where this market's going. And like I said again, I'm not ready to sell yet, because I feel like this market can drop by Friday. And then I'll probably sell. And then when I do buy back again, I'm going to buy, instead of January puts, I'm going to go into the next month, February, and buy the February puts. Okay, that's it. I'll talk to you guys tomorrow.